Okay, this is just going to be a quick trade recap on the trade I took today, Friday, July 11th. Let's get right into it. Starting on New York Open at 9:30, price created a fake out higher, a Judas swing lower, taking out internal sell side, which we can see right here, dipping under that 8:30 open in price, and then creating our run higher. This 1 minute inverse shot right through. Taking us all the way up to the London high, which we actually created SMT with on ES. So NQ took out this level. ES did not take out this London high around this time, which is about 10 a.m. Silver bullet. If we look at the standard deviation from where we had our Judas swing right here, I'm not sure why that's blue. Change that to red. Right here where our standard deviation swing is, we can see that we made it all the way up to this 2 to 2.5 standard deviation zone in the London high, which is a probable reversal area. You can see now we are above that midnight open. We are above our 10 o'clock open. So we can see 10 o'clock open right here. We kind of pulled back a little bit. Here we are creating our 10 a.m. candle wick for us to displace lower. Get that stuff out of here. So, okay, where did I take my trade, right? So here we go. We're chopping above this London high. We're getting into about the end of the first 4-hour 30-minute candle, which is 10 to 10:30. That is the first 30-minute candle of the 4-hour candle. So you can see right about here, we're closing. This is our significant high because this is that 30-minute high that we made right here. Make sure it's a solid line here. Boom, we're chopping a little bit more, chopping a little bit more. Boom, what do we do right there? This is what we do. We are taking out a 30-minute cycle high. So this is a 30-minute cycle high right here. Make sure I can type correctly. So we take out this 30-minute cycle high. Then we start to displace lower off of it right off the bat. So right before we take out this 30-minute cycle high, there's this 1 minute CISD right here. Boom. First initial PDA that we are going to be targeting some bit of lower price. We're going to check over here to the 15-minute, and we're going to see, what sort of price target do we have to target with price? That was pretty redundant, I would say. If we're looking here, there's this 15-minute fair value gap right here. Actually, we'll even do it in a zone so you guys can see. 15-minute fair value gap right here that is unmitigated. So this 15-minute, it's really wide, isn't it? So here we're gonna do this. We're even gonna put this on the bottom so you guys can see exactly where it is. Bottom right here. There's this 15-minute fair value gap right here that is unmitigated, hasn't been tapped into yet. If we are bullish, we are going to retrace back into this to at least extend to some sort of higher prices, correct? So what do I see here? I see that we have this 1 minute inverse fair value gap right here, which not only got inversed to the upside, but ended up getting flipped back around and inverse to the downside. Boom. So this is PD array number 1, right? Those are terrible numbers, right? We'll just write number 1 here. This is PD array number 1. So let's get rid of those two. We don't need those. What else do we have? We're looking for a secondary reason to enter price. We never enter on the first PD array because you never know if it's just a fake out or if it's actually a continuation of a reversal trend. However, we have CISD PDA number 1, PD array number 2 of this inverse getting inversed twice back to the downside after the 30-minute cycle high was taken. And then obviously the third, more higher time frame sort of PD array we have is that this London high was SMT. So keep in mind reversal trend number 1 here. So here's what I was looking for, right? We were obviously showing a lot of support on top of this 1 minute fair value gap. I was looking for it to get inversed. So here was that inverse that we got. It might have even been candle close, but yeah. So here we go. So here's where I was, right? So I was looking for this 1 minute fair value gap over here to get inverse through. Next candle, boom, inverse through. So that's where I got entered in. I think I got filled in somewhere around this level. Top steps fills, are a little wonky here and there. So actually, hold on, that's the wrong box. Top steps fills are pretty wonky, but that's where I was filled. I was protecting that inverse high that we had right here. There's also a fair value gap above it, so it was looking something like that. 1.36, pretty good risk to reward. Great target, great breaker reversal. I mean, everything. This is a perfect trade, right? Perfect trade. This 1 minute inverse right here is what we got our initial entry off of. So we're gonna let price chop around for a minute. I'm thinking, all right, boom, here's this retracement, right? We even created this little 1 minute fair value gap in here. that we have. So we're going to chop around a little bit. Price comes back up. And I'm thinking, okay, so we're in this area. Don't remember exactly where my entry was. I could figure it out very quickly though. So after we displaced through, I got my entry. We came back up, created a swing low. I'm thinking, all right, here we go. Here's my break-even level. You always want to target break-even levels that are like the first probable reversal zone. So anywhere that price could potentially hit and then reverse higher off of is right where we want to go break-even. So off of an initial fair value gap entry, you're not really left with much. Maybe this level right here is the one that you could do, but it's a big wick, so it's unlikely that we don't displace through that. But this is a perfect area because we have this swing that we've created. So as soon as price comes back below this, you're right to break even, because there's always a chance that price will come out here, not tap this 15-minute, and then boom, shoot right back up. So we're gonna let price play out a little bit. Price obviously respects the inverse that we created, comes even, taps up into that 1 minute fair value gap, never actually closing through that inverse that we created. And we started to get a little bit of displacement off. Boom, there we go, break even level. So right away, my stop is, I don't even know, it was somewhere around this level, correct? That's where my stop loss was. So I'm thinking, all right, we closed to this level. Everything's looking great. We're probably just going to displace right to this 15-minute fair value gap. But boy, was I wrong. Here we come right back. This is how I know where my stop, where my entry was actually. It was right there, because this wick came all the way up right in this area and stopped me out break even to the tick. It was an extremely devastating trade because, as we see a few candles after this, I mean, obviously I would have gotten stopped out if my entry was right on this level right here too. So I would have been break even regardless in this trade. And then as we watch price further go down, and boom, price hits the target. Super unfortunate trade, right? It's a great trade, great trade. Let me explain why this is a great trade. We have a perfect reversal confirmation right here with this breaker. A CISD, inverse, double inverse. This is my ICE model. My double ICE model is the inverse confirmation entry model. So inverse right here, and then this is the confirmation. Boom, that's the ICE model. IPDA model, PB trades model, where you have to find the highest time frame inverse in the current trading leg. That would be this. This is the only fair value gap that got inverses in this entire trading leg. So boom, that's the IPDA model too as well. I mean, perfect trade, perfect model, perfect draw on liquidities, 15-minute unmitigated fair value gap, perfect draw. Sometimes price will just come back up and it'll stop you out. Break-even trade, I was one and done for the day. I could have looked for more, but I didn't because my head was a little off. This is a crucial part that I want you guys to know too. Sometimes you're going to win a trade and you're going to feel amazing. If you lose a trade or even just hit a trade break-even, sometimes I would argue break-even even feels worse than losing a trade, because watching your trade hit break-even and then going and hitting your take profit is excruciatingly hard to watch. I won't lie. So if you're in that sort of scenario and you find yourself where you're like, oh, I'm really pissed off, I'm having FOMO right now because I wanted to win that trade, and I did win that trade technically, I just got stopped out at break-even, and the trade was still a winning trade. You know, you don't have to make money every single day. That's the nice thing about trading. You can make money in large amounts at small periods of time, to the point where sometimes you can take a day off, you can take a loss, you can take a break-even day where you just step away from the chart. So if you find yourself in this area where your FOMO's taking over, your emotions are taking over, even if it's not a loss, just step away. You're going to make a poor decision after that if your head is not on 100%. So unfortunate day, unfortunate break-even. No red days this week, no losses, only green days. So can't complain about anything. Unfortunate Friday. That's all I have for you guys. Thank you. Make sure to like and subscribe.